two things holding the market back, or at least two potential headwinds. In the dollar index rising in value, as well as U.S. Treasury yields. The U.S. 10-year up above 1%. It's been up there, 114 right now. 1.25 is our upside target. And then as for the dollar index, you got 90.5 being first resistance, but there is a lot of resistance from 90.5. It can go as high as 91.5, so keep an eye on those. Now, the dollar can hold commodities back. It's not holding crude back yet. 52.60, 52.90 has been our upside target in crude. We got there.
I'm Oliver Slope with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, January 12th, USDA Day, and boy did we get some fireworks. Talked about the fund money recently, really not participating in the livestock markets, and I think that is starting to turn in these deferreds. I was disappointed April couldn't keep up with the August contract, but nonetheless, I think funds will continue to look at that as an underpriced asset, looking out a little bit further.
Fed Chair Powell is talking, and he's reiterating their commitment to a strong labor market, symmetrical inflation targeting, and keeping those bond purchases there. Now, obviously, earlier this week, we started to hear potentially a bond taper later this year, and the Treasury market reacted. The 10-year yield was already pushing higher, and that sort of encouraged a little bit of a capitulation. The market profile was met with demand, ultimately.
The reasons behind why I like sugar so much is that sugar tracks energies really well, and energies have been some of the best performing commodities. It's due to the ethanol demand. Also, sugar does track corn as well because of ethanol demand, and those have been two fantastic commodities just recently.
More upbeat on is those deferred contracts, and if you look all the way out to August, that is a very constructive chart. And one of the things that we've talked about several times on your show and continue to reiterate with clients is the fact that we haven't seen very much fund participation in the livestock markets. We've seen almost every other commodity sector rally, from coffee to sugar to lumber to Bitcoin to stock markets, etc. Corn, as we had just mentioned, everything has rallied on inflation fears